Good morning, traders. This is the first video post that will accompany my blog posts specific to trading setups and how to develop a systematic, predictable process. I'm going to put these under part 6, so part 6 A, B, C, D, E, etc. That will specifically outline in great detail what my trading process is for each one of the types of trading that I do. So this post can be found on our website at compoundtrading.com. Just go to blog and lead trader notices and you'll find it under that. You can also just go to my Twitter feed, Kurt Melanopoli, and it's posted there this morning early. It's 3:25 where I am, 5:25 Wall Street Eastern Time on a Sunday long weekend, Memorial Day weekend. But anyway, so this is the most recent post, and it's an overview. It's not specific, but this video is going to be specific about the indicators that I use and the trade setups I use. So this particular post, like I said, is an overview, and it gives you an idea of the type of trade setups I'm going to cover. The first thing it covers is my personal objectives, just so you understand what my objectives are. Our primary objective is the bar or test of my success is directly attached to what percentage of the traders in our group are successful on a regular and consistent basis. In other words, we are not designed for the cowboy traders. We're a trading group that is committed to winning, and I very specifically want to build a winning team. So the objective is to get everybody over the wall, and I won't go too far until everybody's with us, kind of thing. And that's our personality in our trading group. Our trading group, by the way, includes a typical trading room and a swing trading platform newsletter, but we also have algorithmic models, so a totally different than typical, for sure, side of our business. But you'd have to go to our website to kind of get a feel for that. But anyway, so that's my personal objective. Then the post goes through the 3 different categories of trading that I do. I'm a day trader, I'm a swing trader, and I'm an algorithmic model trader. I was an investor for many years, for decades, and left it behind because I was getting better ROI from day trading, swing trading, algorithmic model trading. Now, most recently, the algorithmic modeling is killing anything else I do, just completely crushing it. But you'll find that the processes or the setups that I use for day trading and swing trading are really predictable, and they can be duplicated. So it goes through a list of setups I use for day trading here. It goes through a list of setups I use in swing trading, which can also and are also used in day trading. And then it goes through the setups I use for algorithmic model trading. And then basically in closing, it just says that I'm going to get very specific about these different setups. So this is the first video in that setups series. And so what I'm going to do is I'm going to take you through one chart at a time. And so this is going to be specific about the different types of indicators and setups, but also generic and overview, in that I'm going to run through them all in one video, and then I'm going to break down video by video each specific indicator or trade setup going forward. So this will be your broad overview of all the different setups and indicators, and then I'm going to do individual videos breaking down each one. So the first chart that we're going to go to is FSLR, so I'll give you a minute to bring up the daily on FSLR if you want to follow along. So on my charting, so you understand how it works, I use the 200, the 20, the 50, and the 100. So my 200 is pink, the light blue or powder blue is the 20, the 50 is the purple, and the 100 is the blue, the darker blue on my charts. The other standard indicator that I have on here is called a Stochastic RSI. That's here. There's a MACD here, and a custom indicator that's only available on TradingView that provides the highest predictability in terms of conventional indicators for charting. It's called a squeeze momentum indicator, and it's down here. So when I'm setting up my swings, or I'm on wider time frames like a daily or a weekly, I will use the 20, 50, 100, and 200 MAs. When I get to tighter time frames, when I'm day trading really tight time frames, I'll turn on my EMA 8 day, so my 8 EMA and my 21 EMA. When they come on, so my 21 EMA is green, I'll turn it back off, and my 8 EMA is yellow. I'll turn that back off. So a standard setup that we've been working on the last 3 weeks in the room that we've been reviewing in our midday reviews. So by the way, every day in our trading room we run midday reviews from 12 o'clock to 1 o'clock Eastern, and so it's trades that we've done, so recaps and what happened, and then trade setups and chart setups for future trades. It's fantastic because it brings a fresh amount of trading ideas to the group, and different people can bring their charts in and we'll answer questions. And what it also does is it refines the process with our traders, and through repetition equips traders to be able to trade successfully and predictably, because they don't have to think once you've executed and reviewed a number of times. Repetition breeds success is the bottom line. So FSLR represents a trade setup that we've been really working on for about 3 weeks. And what it is when the 200 MA is working its way down like this, and then price action breaches the 200 MA. And specifically what happens after the breach, and specifically what happens before the breach. So where the real predictable trade comes in here is at the breach. So what we're looking for are things like this 20 MA breaching that 50 and price being over the 200. That's one setup. Then over time the 20 breaches the 100 with price over the 200, and what happens? And then over time the 20 breaches the 200, and what happens to trade? Now that's kind of the ideal situation. So when the 20 breaches the 50, you want to see some price lift. When the 20 breaches the 100, you want to see some price lift. And when the 20 breaches the 200, you want to see some lift in price. Now while we're trading each one of those MA crosses, you can do it one of a few ways. You can take the trade at the 20 breaching the 50, and then when the indicators turn down on a tighter time frame, then you can exit, and then when it happens again, the 20 goes through the 100, you can re-enter, and when the 20, same thing there, and when the 20 goes through the 200. The thing is, if it's really tight, this is fairly tight trading, you may want to just sit through it as long as it holds that 200. Now it did take out, I apologize for the sirens in the background there, something's going on outside. Price did take out this 20 MA or 200 MA and then tested the 20 almost. So there's a couple different ways to trade that. Now normally you'll get much better price action than this, but this is just one chart, and then as it works through, it's a matter of whether or not you hold through the process, because typically what you'll do is you'll get a bull system or a bull action play. So that's one way. So that's with my MAs. Now of course you can confirm all of this with your MACD mostly. So let's take a look at where the MACD turned up. So the MACD right here on the daily for FSLR turned up here on March 7th, way earlier than any of the MAs started to cross over. That's your first indicator that it's starting to bottom and that these MAs should start to cross. So really this is the first indicator, one of the first. So I rely heavily on the MACD, especially for my swing trades. So my swing trades on our swing trading platform are very successful, um, and they are mainly based on the MACD. Of course, there's many other indicators we use to confirm, but the other thing that happened at that time is the stochastic RSI started to rise. So stochastic RSI is basically overbought and oversold. So at this point at the bottom here, it's oversold. At this point at the top, it's overbought. So you can, when you start to enter, a swing trade, you can watch the stock RSI and get a feel for what's going to happen in trade based on oversold and overbought. That's one of the least indicators that I use, but I use it to try and time trades. Timing trades is not easy, so it's one thing that I just, it's one thing I use. The other thing I use is volume. It's not easy to see on this chart. I use black charts, by the way, because I get so much chart time that my eyes get sore. But I also look for increasing volume. And then my squeeze momentum indicator, it's not important that it's green or red, it's more important which direction it's trending. So at the point that the stock or the MACD turned up, my squeeze momentum indicator confirmed through the fact that it was trending up. So there's the other side of the 200 MA, which is the bottom play, and that's this scenario. So your MACD crosses up, your stochastic RSI starts moving up, and your squeeze momentum indicator, which is my favorite of the indicators, especially for day trading, it starts to trend up. What'll typically happen then is that it'll test the 20 MA and then it'll come off, and this is what happened here. And then it'll come back down, and when you start to see the indicators cross back up, which is what you see here, it'll get up over the 20 and get into the 50 and test at the 50. In this particular instance, what happened was there was earnings right at that timing, and big volume came in and got it right through the 50, right through the 100, and tested the 200. Typically it would come off at the 50, and then it would work its way back up to the 100, come off at the 100, work its way back up to the 200. So it's a process through the MAs until it gets up over the 200. Once it gets up over the 200, then it becomes a process of it either completely breaks pattern and just starts to trend up, or it's going to come back and test that 200 MA a few times and then create what we call a bull and come out of the bull and typically get serious momentum at that point. It's kind of its make it or break it point. So those are the standard kind of setups. Now we can move that back on the weekly, and it's always a good idea to go wide frame first and then down to your different time cycles. So your daily, your 60-minute, so from your weekly to your daily to your 60-minute. So your 1 week's here, daily, your 1 hour, your 30-minute, your 15-minute, 5, 3, and 1, depending on your time frame that you're trading in. So here's the weekly. So the 200 is way up here. Now, by the way, these MAs will typically act as support and resistance too. Now, they will typically also coincide with fib levels. So if you set up simple fib retracement levels, and we rely heavily on these, and I'm flying through all the different indicators just for the sake of an overview video. This one's a little funny the way the fib's set up. But anyway, my point here, yeah, that's a little, so the point is that, let's say trade continues up from here on this chart. This is a weekly. The fib is approximately at 44.21. What you'll find is that 100-day is going to be, it should be in line with that 44.21 when price gets there. In other words, the MA, which is actually a representation of the tape, right? So I learned on the tape. I'm kind of aging myself there, but the reason why I like the MAs is because I learned how to trade on the tape, and they're a representation of the tape, just a modern representation. You'll find that the Fibonacci retracements, the support and resistance, will coincide with your moving averages. You see how this fib here, 36.46 confirms with the 50 MA. Why is that important? Well, that's going to be your next resistance. So some traders will back off there and even exit the trade, let it come back down and get lift again, and then take it when it's back through. But I'm not going to get into the details of that right now. I'm simply going to show you the indicators that I use. And then the next fib up here that comes in around 49.83, the 200 MA is going to coincide. So just like I showed you when I was showing you the daily chart, how the crossover of the MAs happen and create the bullish action if price is above them. That's the critical part all the time. Same with the downside. So you see how the 20 crosses the 100 here and price is below? That's bearish. So once price, once that crossover happened on the weekly, but you can do that all the way through. So when you're in the trade, you can also, so how I time my exits is, so here's the daily, and it became bearish. So we'll just go back on this chart here. So you see where the 20 crosses the 50 and price is below, in here. Well, when price lost the 50, that's a concern, and then when the crossover happened, so by the time you're at 63.88, that's a concern, and that's on the daily chart. Now here's an example, that I showed you at the beginning of the video where the MAs, they finally get crossed over, price gets up, and the 20 comes through the 200 MA. So that's at 52.05. You get the sell signal at 70.35. So, that's a what is that? A 40%. So 50 bucks times 4 is 20. Yeah. So that's near a 40% increase before you get the sell signal. And the sell signal just about happened here, but you'd be fine there too. Good trade, and it happened again here. And that's what the crossover of the MAs. Once price gets underneath the 50 and the 20 and 50 are crossed, then it's it's bearish, and it confirms at each crossover as you go down. And then the process down happens, and then you get the signals that possibly a bottoming is happening with your MACD and the other indicators I showed you. I typically, unless I'm trading full time, and so when I'm trading full time, I will get in here before the 200 MA. I'll trade through these MAs because once you understand how they work, they are very predictable. When I'm not trading, focused full time, and right now I'm not focused full time because we have a considerable trading business we're building, but there's also I've got other businesses that I have to tend to. So what I do is I trade after the 200 day because it's much more predictable than what doesn't require the same amount of attentiveness as before the 200 MA, but that's still possible too. Okay, so that's how you know to get in and to get out. So we're going to go back on the 1 week chart here. I'm just going to well, I can leave the fibs on there, it doesn't matter. So on the 1 week chart, the 200 MA is way up there, the 100 MA. So if I was in the trade right now, what's my next resistance? My next resistance is at the fib. My next resistance is at the 100 MA. And then there's something that's called natural resistance, right? So your horizontal resistance that just comes from previous lows. So to mark that, you would put one right here, for example. And that coincides with where trade right now is testing a resistance. And then there's another one here where that fib is. So when you get them all confirming like that, so there's another one here. So you got the horizontal natural resistance, you got the fib, and then you're going to have the 100 MA all in around 44.84, and that's going to be a significant resistance. So I'm using price to enter, I'm using all the indicators that I just explained, and then as I get to each resistance, I have to make a decision whether or not I'm going to hold through and have a test back down or not. And typically, if it's a swing, if the MACD crosses, then that's when I'm out, and everything else confirms. If it's a day trade, a little bit different, but still the MACD is important. It just depends on the time frame. So I'm going to move this out to the daily. So here's where it gets through the 200 MA. It's testing resistance there, and it's going to come back off. It may or may not get through the 20, but it should hold at the 200, and that's what I'll watch for. And every time it gets to the 200, I'll re-hit it. Every time it gets to resistance, I'll sell it. So every time it gets to the 200, I'll go long. Every time it gets to a major resistance, I'll sell it until it gets significant lift. And once it gets significant lift, so that's when it comes out of the bowl, then I'll stay in it. And in fact, I'll even add at different junctures. So another indicator that I use is well, it's not an indicator, but a trading decision is earnings. I'll very rarely hold through earnings. I did recently through Amazon and Google earnings on the swing trade side, and they worked out. But they're risky, and I typically won't. I'll trade. I'll sell in prior to and trade after. If I have to miss 10 or 15 or 5% of a trade, that's fine. I go for low risk. The other part of the indicators that you'll learn from us are ways to use Fibonacci modeling that is really a primer of algorithmic modeling, and these diagonal trend lines and how to set up trading quadrants and how that all works. Of course, I'm not going to get into the details right now, but that is one thing that we get involved with. The idea is this video is just to show you an overview of the different indicators that I use. So if I was trading FSLR on the day as a day trade, what I do then is I go through my weekly, I go through my daily. Now I know where all my resistance levels are, etc., etc. And then I move it down to the 1 hour. I take a look at the 1 hour, and right now, so the same principle applies. Now, on the day trades, I have another indicator that I'll use, and that's VWAP. I'm just going to turn it off for this specific instance here. I apologize, I'm really struggling with allergies. So this is an example of bearish action, right? So price is under the 50 and under the 20. The 20 is about to cross the 50. Now it's holding at the 100, so it hasn't completely failed on the 60-minute. But as a day trade, that's not the best place to get involved. Now, what does kind of balance that out is that the stochastic RSI is all the way at the bottom. Ideally, when you're timing trades, you want that stochastic RSI right at the bottom. So that's oversold. Top is overbought. Here, MACD is trending down, so that's bearish. My squeeze momentum indicator is red. It's bearish, but it's just starting to trend up. So there's a little bit of indecision in that the indicators are competing against each other. And I do have resistance fairly nearby. The whole idea is to take a trade at support. Now on the 60-minute, that 200 would act as support, or that 100. So that's a little, it's not clear. So on a day trade, I would have difficulty making a decision there. Now when you come down to the 30, it's sitting right on the 200. And then you come down a little more on the 15 minute. It's completely lost its MAs. And then down to the 5 minute. So it's bearish on a short, tight time frame. Wider time frame, it's not, right? So on the daily, it's much better. So the timing in this trade is not great yet. So what you would do is you would use the same principles I was showing you on the daily and the weekly, in that you'll want to wait for this pink line to come down and price to get over it, and then that blue line to start breaching the MAs, the 50, the 100, just like we did on the daily chart. So this would be an example back here. So on the daily, so let's see how this trade would have went. So this is an example right here. So where it bottomed out on the daily, and it started to give you indications of a turn in here at 34.71 on May 18th. And then by the time you get to, I just need to move this guy over a little bit, June 24th, so a month later, now this becomes a swing if you stay in it. And that's the whole idea of day trading. You want to day trade and hopefully get set up for a nice little swing. You know, so you would have ended up at 39 bucks from 34. You know, so you're about 14% on that monthly trade. It's a decent trade. But you need to know how to enter it so you get the right timing and the right confirmations, and you need to know when you should be exiting it. So you enter on a tight time frame like this based on the fact that your weekly and daily is set up first, right? So you start with your weekly and make sure it sets up, and then you come down to a tight time frame, and typically I won't use a 3, I'll use a 5 or 15 or a 1 hour, and then you get the confirmation and you enter the trade. And if you time that trade properly with power, which is what happened right here, you can see a huge volume spike right when it started to confirm. So I'm not the only trader that knows how to do this. This is what brings it predictable, right? So had you entered right when the price action peaked, like that happened fast there. So a lot of traders tell me, well, I get chopped up, I get I get cut up, because I'm saying, you want to exit fast if it goes against you. Well, how do you make sure you exit fast and still not get chopped up? Well, you got to time your trade so you got power behind it. So the principle I use is price trigger power trade risk reward, PTPTRR, price trigger power. So price is moving in the right direction. Your trigger is that it's over the 200 and the 20 is coming through, and right after that 20 gets through the 200, look at the power of and the actual price. So if you timed it when the 20 gets through the 200 and you hit it long, you're going to get all that lift. So you're going to get that lift from 35.06, well, 35 bucks basically, until it hits resistance at 36.10. There's no way that you'll have the problem of getting chewed up in there, because you'll have so much lift that the chances of it coming back and testing $35 are slim, and you can see that. So it does come back and it tests close to the 50-day at 35.49, but you have lots of room, lots of variance, and then it goes again, and you could stay in this. In fact, you could add all the way to your next resistance. Now, typically I'm in 20% right here, so 20%, and it'll come up, it'll test, it'll come back down, and now I go into my second leg, I add another 20%, so now I'm in 40%. It'll come up, test, back, now I'm in 60%, come up, test, back, now I'm in 80%, come up, test, back, now I'm in 100%, and then when it gets here I'd sell. So I'm trading full time. It's really, really tough for me to do it while I'm in the trading room with everybody and I'm answering questions and DMs, but when I'm really focused and I'm really trading on my own, and I'm thinking about going dark a while with our trading room here shortly, just so that I can start to focus on my trades a lot better, so I can really focus in with some of the traders too. But I also want to get some real prime video done. But this is the kind of thing. Now you have to understand that it doesn't matter what time frame you're on, when you do this, typically you're going to get 5 legs. So people ask me, why do you go in 20% and wait and then go in another and go in another? It's because that 20% isn't by accident. That 20% is a calculated, everything that I do is calculated, back tested, scientifically tested through arithmetic and trading probabilities. I don't trade, well, for fun. I'll trade all kinds of stuff for fun, but you know, the setups that I'm teaching are the most predictable that you on planet Earth. The only thing more predictable than these type of trades are algorithmic trading. So this particular setup works on every single time frame, and you can do it on the different time frames. It depends on what you're comfortable with. But that's a fantastic example right there. And then so this turns negative in and around here. I mean, you can take whatever MA crossover you want with price underneath, but this is where it's absolutely negative. But I would already know, because I know where the resistance level is, where I'm going to exit. I already know that this is very likely to happen. I've gone through my 5 legs. I'm at major resistance, and I don't have to wait for it to completely confirm to get out of it. So I'll exit very quickly at that major resistance after everything has played out in my trade properly.